they're not going to be able to keep up with this. And one of the reasons we learned an important lesson from Tesla, the S&P did not put Tesla in that index until it had hit $500 billion in market cap. Why? Well, two of their criteria are a four-quarter moving average of profitability with the last quarter profitable. Well, Tesla didn't hit that, I think, until 2020 or 21. I forget. I think it was 21. Was it, Brett?
That sounds right.
Yes.
Sure.
And just think about that. How many companies are bigger than that 500 trillion? And oh, by the way, most people who waited until the S&P gave them permission to move into Tesla are underwater right now, because there, as is always the case with disruptive innovation, there's controversy, and it has taken the stock down.
Ark Invest has just issued a warning to all Tesla investors, and it's something that everyone has got to listen to. If you're a Tesla investor, either for the short or long term, then this is one that you don't want to miss out on. But before we delve into the details, listen to what Cathie Wood just said in a recent interview on CNBC.
Last year, when it was cheaper than this, I think you bought some more, a good chunk, a little bit more than a week ago. Do you keep buying it as it goes down, if it continues to go down this year?
Well, if you've watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading Tesla at the margin. So when it is soaring and everybody's excited about the good news, as we move towards electric vehicles, we will take profits. And likewise, as investors and traders begin to fear that we're going to be in an air pocket, we've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric. And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down.
Okay.
In price. Tesla can price down. It can price down if we're in a weak spot globally, and it does appear that we are, certainly China and Europe, and even here in the United States.
Cathie Wood's bullishness on Tesla has started since the automaker's early days. Back in 2017, when most folks saw Elon Musk's electric vision as just a dream, Wood was out there singing its praises. In fact, she predicted a $1,000 price target, a forecast that sent shockwaves through the investing world. And guess what? She wasn't wrong. Tesla soared, defying skeptics and making Wood look like a genius. Furthermore, this cemented her reputation as a visionary, and her bullishness on Tesla only intensified, to the point where Cathie Wood upped the ante, predicting a mind-boggling $3,000 price target by 2025. Cathie Wood's latest warning serves as a reminder for investors that Tesla remains a very profitable company, irrespective of how you look at it. It's also a wake-up call for anyone who's still sleeping on the many opportunities that investing in Tesla has to offer. Let's listen to this.
Let's focus on what the market's looking at in the first instance, which is a next-generation EV platform is coming. We're coming out the back of the Model 3 and Y era, so output will be less in 2024 from a growth perspective. Does that worry you?
Yeah, well, you said it. We're really focused on the long term here at Ark Invest, which really you should be for a disruptive name like Tesla. So, they did mention, yes, production growth for this coming year will be slower. They are focused on this next generation vehicle platform, and they're attributing, the part of the cautiousness on production to that. And overall, that's a great thing, right? As well as anyone, that I'm excited about the robotaxi opportunity. So the fact that they're building a custom robotaxi vehicle is really exciting and shows their confidence and their autonomous capability. We have FSD12, their latest version of the autonomous technology software in the car, rolling out to customers. That again shows confidence in their capability. We also heard that Optimus might begin shipping next year. So I think Tesla is this behemoth in the AI space. It's going to be one of the greatest AI opportunities of our time. And I think to ignore that is frankly wrong when thinking about the stock. So I'm excited about it.
Well, the next gen vehicle platform joins the traditional car making side of the story with the AI story, right? What did we learn? Musk said it will be low cost, that they're making progress on start of production, which will start in Texas in the first instance. But he said take 2025 with a grain of salt. Did you learn enough during the call about the next-gen platform to fully understand where we go from here on this future robo-taxi concept?
Yes, well, I'd say, overall, I think Elon is a lot more cautious than he has been in the past with his forecasts. I mean, he said it on the call that he has been really optimistic with timelines. And honestly, who can blame him? Because I think humans in general are pretty bad at predicting AI progress. But yes, we heard that they can start production next year on the next generation vehicle platform. I think there's a lot of cause for optimism in what they said around margins. So we saw automotive gross margins, ex credits tick up in the quarter. We did hear that, one, they're cutting costs on a per car basis in a way that's really unprecedented in the auto industry. And they also said that even though, on their current vehicle platforms, they're sort of reaching the limits of that cost reduction, that doesn't mean that they're done, right? So we heard on the design side, it's commodity prices that flows through to the underlying cost of the vehicle. That takes some time. So there's still optimism there. And I think that's amazing. When you look at EVs as a whole, traditional automakers are cutting back on their electric vehicle platforms. That's a bad idea because EVs are already cost competitive with gas-powered cars. And guess what? It's only going to get cheaper. So this is the future. And Tesla is the leader there.
The plot between Cathie Wood and Tesla has been interesting for a while. However, 2023 rolled in and cracks were starting to appear in Wood's unwavering optimism. Tesla stock hit a rough patch, and Wood, ever the pragmatist, acknowledged the bumps. The investment expert warned of a volatile period ahead, citing the Cybertruck's potential production woes and the overall maturing EV market. Even her $3,000 prediction was quietly shelved, replaced by a revised $2,000 target by 2027. Still bullish, but with a dose of reality. However, it's still undeniable that the Cybertruck is a money printer that's soon to be revealed. Hey guys, welcome back to Tesla Tomorrow. Tesla recently disclosed that it's set to launch a nationwide tour to showcase its flagship Cybertruck pickup truck in its second largest market, China. The automaker disclosed this on Chinese social media messaging website WeChat, noting that it's able to ship some prototypes of Cybertruck for display in China, even though it will be difficult to make the vehicle legal for the road. Interestingly, Tesla launched the roadshow of its flagship Cybertruck pickup across 8 cities in China, which attracted massive attention among Chinese netizens and Tesla fans. For instance, the Cybertruck's Beijing tour was held at the Tesla store in the city's central business district, and it attracted a large number of audience. Although the pickup was only displayed in static, there were also reports that onlookers took roughly about 2 hours in the queue in order to see the vehicle. Unlike the US, pickups have a niche product in China, where many cities, governments, and Beijing included, don't actually allow them to enter downtown areas, and Tesla does not even open Cybertruck for order on its Chinese website. However, this is the first step to becoming something big, and investors as well as enthusiasts and analysts are actually taking notes. For instance, while Cathie Wood is cautious about the future of the Cybertruck, it is still one of the biggest bettors when it comes to the potential of the Cybertruck. In fact, her firm, Ark Invest, has actually constantly reiterated the profitability of Cybertruck and cited its potential against similar vehicles from rival automakers. Before we carry on, if you're as excited about the future of Tesla as we are, then be sure to hit a like on the video and subscribe and ring the notification bell to keep up to date on everything going on with Tesla. In 2019, Cathie Wood shared her thoughts on the Cybertruck, stating that she'd looked at it from many different angles and it far surpasses other trucks. According to the Tesla Bull, when it comes to comparing the Cybertruck to the Ford F-150, there's absolutely no comparison. Wood noted that the Cybertruck will be a significant competitor to the F-150, explaining that other electric vehicle makers will have to sell off their own vehicles at either a loss or a higher price, since Tesla is able to produce its own batteries and is lowering its overall cost in making EVs. Cathie Wood made this statement as a tweet in response to Ark's chief futurist, Brett Winton, who pointed out on Twitter that Tesla's margins in certain vehicle categories have been better than those of traditional automakers. Brett Winton had highlighted the incredible potentials of a Cybertruck, stating that even though the vehicle's exoskeleton design could deliver Tesla an unimpeachable performance cost advantage in the segment, it's still something that's worth looking out for. In this tweet, Winton noted that in cars, Tesla is still delivering transformative margins in vehicle segments where traditional automakers can barely hold water. He also added that Tesla could opt for similar margins in trucks and by doing so, push all of its incumbent domestic competitors onto its Cybertruck blade. The Ark Invest chief futurist explained that while Tesla took on engineering risk for both the Cybertruck and Model X, the risk embedded in the Cybertruck exoskeleton accrues to the core cost performance characteristics of the vehicle.
There's a learning curve with EVs, and I think a lot of people go to Hertz and say, I'm going to try my first EV, and they learn, okay, if you're going to drive 50 miles or 100 miles, you've got to start thinking about charging. So a bit of a learning curve. It is true that the repairs cost more, but maintenance also costs 60% less. So there's a bit of a trade-off. If you listen to Uber, on the other hand, Dara will tell you that they're encouraging more of their drivers to rent from Hertz and others because the drivers get more. Uber's take rate is not more, so it is really beneficial for drivers, and consumers love them. They're willing to pay up. So, when innovation is evolving and the infrastructure is moving into place, but not quite there, especially in terms of repairs, you're going to go through fits and starts like this. But the trend is undeniable. Okay. Last year, electric vehicle sales globally were up 28%, while gas-powered vehicle sales were up 9%. So share gain still.
One of Tesla's most anticipated projects in recent years is Cybertruck, and several experts have predicted that the vehicle will yield massive gains for Tesla, with some estimating 10,000 truck deliveries as part of his overall 1.9 million delivery estimate for 2023. According to Winton, the manufacturing approach for the Cybertruck is so different from anything else in the pipeline that if Tesla lands cost on sides, it will likely mortally affect the domestic manufacturers. Even Cathie Wood has disclosed that Tesla's Cybertruck is the sleeper that could destroy the pricing structure of light-duty vehicles. If you recall, Ford's F-Series has been the best-selling vehicle for 41 years straight. Ford introduced an electric version of the truck, and while it did see strong demand, the company struggled to keep up with supply, but things could be different for the Cybertruck. The truck is Tesla's most daring design to date. Unlike most vehicles, it's got an exoskeleton body, and it's going to be made out of 90% recycled stainless steel. Tesla unveiled the Cybertruck back in November 2019, and since then, the vehicle has amassed over 1 million reservations, with some estimates pushing the reservation number as high as 3 million, indicating that demand for the Cybertruck is through the roof. Amidst sales of traditional pickup trucks and a large number of reservations for the Cybertruck, expectations for Tesla's new pickup truck are running high, and it will continue for a long time.
If things go according to plan, we'll be hitting around like a 20%-ish top-line growth for this year. We will be seeing operating margins slip under the double digits, it sounds like, according to your analysis. And then in terms of the cash flow and margins that make its way down to earnings, what's like the worst case scenario? I mean, we are, though, formally past the loss days of Tesla, or is that a risk that they might post a loss if things get bad enough?
I wouldn't expect to see a loss on the income statement. Free cash flow is a different story, though, given that they're still investing heavily to ramp up their factories and investing in expansions. I do think that there is a risk that we see negative free cash flow if we were going to look at downside risk for the quarter. But likely, I'd expect, smaller but solid positive free cash flow generation, similar to the third quarter results when they report tonight.
Yeah, what does that history look like for us? Give me the perspective there. I don't know the numbers offhand, but I do think that's an important one because their whole entrance into the S&P 500 was such a seminal moment for the company, getting the profitability, moving past the kind of early risk phase where there were so many haters that it wasn't going to work. cash flowing out would be a kind of reminder that, all right, yes, it's a mature company, but there are moments of strain.
Yeah. Tesla has over the last couple years been able to generate solid positive free cash flow. We've seen that start to dip a little bit as we've seen profit margins decline, which is to be expected when you have a margin decline and you're cutting prices to spur volumes. That's Tesla's growth strategy that they think sets them up for long-term growth, because they want to sell as many vehicles as possible so that there's more potential customers once they get the full self-driving subscription software to a level 3 version that's ready for the public. But in the meantime, as they've been investing to ramp up their new factories and expanding production and building new vehicles like the Cybertruck, that is weighing on free cash flow. So we saw free cash flow dip under the $1 billion a quarter last quarter, and I would not expect them to be above $1 billion this quarter either. So in the near term, we're seeing a lower free cash flow generation from the company, but they believe that they're investing to set themselves up for much stronger free cash flow generation in the next several years. So we'll have to see how that dynamic plays out.
In 2024, Cathie Wood's love for Tesla continues to wax longer. Despite Tesla's recent stock struggles, Wood hasn't abandoned her ship. In fact, Ark Invest recently brought more shares, signaling her continued belief in the company's long-term potential. But there is a catch. Her bullishness hinges heavily on Tesla's success in the autonomous driving and robotaxi space, a market she firmly believes is worth a whopping $9 trillion by 2030. So it's not just about sleek cars anymore, but Tesla's ability to revolutionize transportation entirely. So where does this leave us? Is Wood still head over heels for Tesla? Well, it's complicated. Her bullishness remains, but it's tempered with caution. Wood sees the challenges, the potential roadblocks, but her faith in Tesla and its disruptive power has not wavered. It's like saying she believes in Tesla and knows that it will prove itself eventually. With this said, we can say that Cathie Wood and Tesla are like a match made in heaven, but not exactly. It's more like a passionate romance with a fair share of drama and plot twists. Wood, the proclaimed oracle of disruptive technologies, has long been a Tesla cheerleader, but her pronouncements are also peppered with caveats and cautionary whispers. And while she does think that Tesla is a profitable stock, she also recommends being cautious on the investment. Cathie Wood and Tesla's relationship is a fascinating one, a testament to the ever-evolving landscape of innovation and the risks and rewards that also come with it. Whether their story is a happy ending one, well, it remains to be seen. But one thing is for sure, and it's a story worth watching, filled with twists, turns, and drama to keep Wall Street on the edge of its seat. What do you think? Let us know down below, and let us know your valuation of Tesla. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.